Good morning, everyone. My name is Dr. Deepika Tapadia. I am the course coordinator of corporate finance. This course is a 4-credit course. This is a core course of MBA second semester. The main objective of this course, why the student will learn this course, what is the main objective of this course? The first objective is to give the knowledge about the scope of financial management and to make the student familiar about the financial environment of business. To imbibe the knowledge about capital budgeting decision, to appraise business project, to impart knowledge about the capital structure theories, working capital management, cost of capital for decision making of any organization. So these are the objective and the course outcome. Course outcome means what the student will be able to understand after completion of this course. We have divided the outcome into 5 categories: CO1, CO2, CO3, CO4, CO5. CO1 means course outcome 1. Number 1 is analyzing and evaluating the financial system and financial environment of the organization. Student will be able to analyze and evaluate the overall financial system of the organization. Second, CO2 is applying the technique of capital budgeting for selecting best investment opportunity. Student will be able to understand the different capital budgeting technique. What do you mean by capital budgeting and different techniques of capital budgeting, so that the student can come up with a best investment proposal. Third very important outcome is assess the capital structure of the organization and evaluate the profitability condition. Next, fourth outcome is apply the concept of working capital management in the organization. What do you mean by working capital and the management, how the organization can manage the working capital. And fifth very important outcome is analyze the cost volume profit analysis of the organization. So these are the points, these are the outcomes which the student will learn after completion of the course. Next, LMS basically contained 4 quadrant. Quadrant number 1, e-tutorial. It basically includes introductory videos of the course, content videos, audio of each unit of the syllabi. Quadrant 2 basically contained e-content. It contains self-instrumental material, e-books, web resources, research papers, journals and other reference material. Quadrant 3 basically includes discussion forum for raising of doubts and clarifying them on a real life time basis. Different topic of emerging issues will be uploaded from time to time and student will participate in discussion. Quadrant 4 basically this is a assessment part. In assessment, we have divided the questions into 3 categories. One is multiple choice question, second one is short term questions, and the third one is long term questions. Next, the relevance of this course. This course is very much important for the students. Student will be familiar about the financial environment, overall finance and the financial management. Student will able to understand. We all know finance is the lifeblood of any business. So without finance no business can survive, and without financial management no business can prosper, grow and develop. So financial management is very much important for the organization, and every student should understand, should know the overall mechanism, overall concept of financial statement to become a good financial manager in the organization. Basically, financial management is what? It is the planning, organizing, directing, controlling of procurement and utilization of fund and safe custody of profit to the end that individual, organization and social objective are accomplished. The basic features of financial management. We have various role of financial manager in the organization. The main responsibility of financial manager is to acquire and proper utilize the fund in the organization. It is a continuous function. It is not a one-time function. So the basic characteristics of financial management is it is a very important part of business management. That's why we are studying this corporate finance, because it is an important part of business management. It is directly linked with finance, and where finance is linked, it automatically become important. Next, it is a continuous administrative function. It is scientific and analytical function, and it is a centralized function. It is very important function. Being a financial manager, the financial manager has to take various decisions. Basically, the financial manager has to take financing decision, investment decision, and dividend decision. These are very important decisions for the financial manager. In financing decision means financial manager has to decide about the overall capital required, the debt and equity, the overall capital structure. It is the combination of debt and equity. The financial manager has to decide the proper mix of debt and equity in the capital structure. Next is investment decision. Investment decision is basically allocation of fund raised to acquire the asset. Investment decision includes two decisions: capital budgeting decision and working capital management decision. This is the two decision. And third very important decision is dividend decision. Being a financial manager has to decide the dividend distribution. Out of net profit, how much proportion of the profit is retained in the organization for further development, and how much part of the profit is distributed to the shareholders in the form of dividend. This is a very important point that the manager has to decide, so that the company's growth can do properly. We can use that fund for the growth, and shareholders can be happy by giving a good amount of dividend to the shareholders, and the market value of the shares can increase. So basically, this three decision is very important decision. And in this subject, we also discuss about the basic roles and function of financial manager in the organization. Basic roles and functions. Basically, financial manager have three main functions and role, like primary function or executive function. Next is subsidiary function, and third is routine function. In primary function, financial manager has to do various important functions of the organization, that is financial planning, financial control, allocation of fund, acquisition of fund, and distribution of income. These are the functions of financial managers. Primary function. Next is subsidiary function. In subsidiary function, financial manager has to perform various functions like liquidity function, profitability function, evaluation of financial performance, and coordination with other departments. These are the subsidiary function. And third is routine function. These are the clerical or the routine nature activity that the financial manager has to execute, like day-to-day activity of the company. These are the important role and function of financial manager. Other than this, we will discuss about the role and functions of CFOs, Chief Financial Officer, and the important concept of marginal costing. Marginal costing is very much important for the organization, that we will discuss in this subject. And cost volume profit analysis. Cost volume profit analysis is very much important, that we will discuss the basic advantages and disadvantages of cost volume profit analysis. And break-even analysis. We know break-even analysis is no profit, no loss condition. It is very important for the organization to calculate the break-even point for the organization, so that company will be able to understand where is their break-even point. This is the point where company will not earn any profit, and there would not be any kind of loss. It is a very important point. If the company sales increases above the break even point, it means company will earn the profit, and if it is less than the break even point, then the company will incur loss. So every company calculate the break even point, that we will discuss the advantages and disadvantages and basic calculation how to calculate the break even point. Next, cost of capital. Cost of capital is the minimum rate of return that the company needs to earn. Cost of capital is very much important. In this topic we will discuss about different cost of capital, like cost of debt capital, cost of preference share capital, cost of equity share capital, cost of retained earning, weighted average, market value. All these calculations we will discuss, and what is the importance of cost of capital in the organization, that we will discuss. Student will able to understand all these important concepts in this subject. And the working capital management. What do you mean by working capital management? Is a very important concept in the organization, very important concept of finance. Every student should understand, should know about working capital. Working capital, we have two type of gross working capital, net working capital. Gross working capital is basically total of current asset, and net working capital is current asset minus current liability, excess of current asset over current liability, that is net working capital. This concept. And other than this, we have permanent working capital, temporary working capital, seasonal working capital, specific working capital. These are the important working capital. And what are the methods to calculate working capital requirement, future working capital requirement of the organization, that we will discuss in this topic. Basically, we have projected balance sheet method, operating cycle method. What do you mean by operating cycle? It is a very important cycle from raw material to finished goods to sales and cash, again then raw material. This is a complete cycle, and by this method we calculate the future working capital requirement of the organization and proper management of working capital. Next, what do you mean by cash, management of cash, how to prepare cash budget for the organization. Cash budget basically includes cash receipt and cash payment. And what do you mean by inventory management? Inventory is stock. Every company needs to maintain a inventory for the organization. Inventory is a very important current asset for the organization, and proper management of inventory is very much important for the organization. We have different tool, different technique like EOQ technique, ABC analysis, SD analysis. These are just in time. These are some of the technique by which VED. These are the technique where the company analyze and make a proper management of inventory. Next, capital budgeting, very important concept used in corporate finance. Capital budgeting. What do you mean by capital budgeting? Capital budgeting is not budget. It is basically analysis through which company come up with the best proposal. It is basically processing, selecting and evaluating the best proposal out of various proposal. And selection is done with the help of various technique. In capital budgeting, we have different technique like traditional technique and modern technique. In traditional technique, we have three techniques: urgency technique, payback period, and average rate of return. And in modern technique, we have three different technique like net present value technique, we call as NPV, profitability index, and the third one is IRR, internal rate of return technique. These techniques are used to evaluate the best project, and company uses this technique so that company can invest in the best project to earn good profit out of it. So these are the important concept, important points, important things which we will cover in this subject, and the relevance of this overall course automatically increases because this particular course include these many important points. Next, what are the things we include, like live classes, assignments, quiz, FAQ, and clarification on general misconceptions. Next, additional activity. What additional activities we include, like master classes, lectures by industry experts, professionals, case studies, etc. In this subject, we have different case study of companies, the company's capital structure is there, the company working capital management. By this balance sheet we can come up with a calculation of working capital, calculation of cash budget, calculation of inventory management, calculation of capital budgeting techniques. Next, there are some reference books include like book financial management book, fundamental of financial management, and suggested books are there. I am Pandey. We include different type of case studies in this subject. This subject is purely finance, and student will get to understand the overall concept, important concept of finance, which is very much required to become a good financial manager of any organization. Student should know about all these concepts to become a good manager. So this particular subject helps the student to become a good financial manager of the organization, and they can build their career to a greater extent in finance and know the overall mechanism of finance. Thank you so much.